Welcome to the Transparent FX Academy. If you're new to the channel, I'm Nick and I've been a top author on TradingView for many years, as well as being one of the only traders with a fully verified MyFX book track record. So if you want to elevate your trading, you're definitely in the right place. So subscribe to the channel, and without further ado, let's jump right into it. So take a second, pause the video, read the disclaimer, and I will see you on the charts. In this video, I'll speak about GBPUSD. Now, as usual, to keep the video as educational as possible, first, I'll give you the technical aspect for this market. Then we will be moving to the commitment of traders analysis to see what institutions in the market are doing. So what the big players in the market are doing and how they're moving and shifting their orders. And then we'll put together these two different types of analysis. So this is definitely a video you do not want to miss. Now, starting here from the monthly time frame, the first thing that we have to notice here is that we have a market which has been respecting a quite significant historical demand and support zone for many years. Every time the market was testing this zone, it rejected it to the upside quite aggressively, with only one occasion in which the market broke below that zone, which was right here. And anyway, even in this occasion in which we got the break to the downside, immediately the market reversed higher, breaking back above this level of resistance, which at that point again became support. And so far, the market has been respecting this area as monthly demand and support. So more bullish price action could be expected away from this area, as already happened in the past when the market was rejecting this exact same zone. Now, all this push to the upside and rejection away from this zone is coming and is fueled by strong institutional buying. And that is something that, again, we will speak about in just a few moments when we move to the commitment of traders analysis. But for now, let's keep in mind that the market is quite bullish. We just had a strong impulse and correction. And if we want to measure a correction after an impulse, we have to take our Fibonacci from the low to the high of the impulse leg. Now, if we do that, what we can notice immediately is that we have the 0.32 and 50% retracements, which are lining up exactly inside of this area. Now, this area is also the previous low. And when you have previous demand, that now is still acting as demand and support, and the Fibonacci levels lining up in the same area of structure, that usually indicates that as we have confluence of demand and support inside of this area, we have increased probability of seeing more institutional buying inside of this area, further increasing the probabilities of a potential rejection to the upside away from the zone. What we can also keep in mind is that a previous level of support is also an important manipulation area, because keep in mind that in the market, for every buyer, there needs to be a seller. For every seller, there needs to be a buyer. Now, when there is an impulse to the upside, a correction, and the market tries continuing higher, most retail traders will buy and place their stop losses below the low. So if the market then goes and triggers all those stop losses, that generates a lot of liquidity to the sell side. So institutions can use that sell liquidity to actually buy and get their orders filled. Because again, since for every buyer there needs to be a seller, institutions have such huge orders that they need extra liquidity that could be provided, for example, from a stop out situation in which we have huge liquidations in the market, and they can then use that liquidity to actually buy. And at that point, the market creates the final move. That is why so often in the market, I'm sure you have already seen this and had this experience, you see the market create a lot of manipulations and stop loss hunting. So let's keep all of this in mind and drop down on the weekly time frame. Now, if we drop down on the weekly, what we can notice is that we have a market which just now is testing a quite important area. This zone, as we can see here, was acting as previous demand and support from which all this rejection to the upside was created. Again, here the market was going into this area with very strong bearish pressure, but as soon as the market touched this zone, immediately it reversed higher. Right now we're seeing another test of the zone. So again, there is another good probability of seeing the market respecting this area again as support and rejecting it to the upside. That is definitely possible. Just a quick interruption. Let me know in the comments below any new pairs or topics that you would like me to cover in my next videos, because I'm always open to suggestions. Dropping down on the daily time frame, what do we see? Now here in the daily, things are getting quite interesting as well. We can notice that in creating this push lower, the market has just printed this overextended M pattern. Now in general, after the creation of an overextended M pattern, what you would expect is a correction higher, because the market is again overextended to the downside and in need of a correction. The upside target in the case of the correction is the 0.32 Fibonacci retracement taken from the high to the low of the impulse leg, which in this case gives us our first upside target around this area, which means that there is definitely room for a potential reversal inside of this area and for the market to trend higher for a nice correction. Now, if we move to the commitment of traders analysis, what do we see? Well, first of all, we don't have the very last reports because the US government is currently in a shutdown. So obviously they have the most non-essential functions not working, and therefore we're not getting the new data, which should end quite soon with the US government shutdown ending. And what we can see with the previous reports, which it can help us give kind of the trend. So what was going on before we stopped getting the reports, because usually institutions take a lot of time to actually shift their positioning. And what we can see here is that net positions were growing. We went from minus 39K all the way up to minus 1.9K net positions, which means that institutions were closing their shorts and opening longs. We went from 112K shorts all the way down to 86K shorts. Longs got increased from 65.6K up to 84.5K. So we had an increase of longs and decrease of shorts from an institutional perspective on GBPUSD, making it stronger, which means that there is the possibility, and I definitely wouldn't be surprised if with the new report we actually now see positive net positioning, which means that this trend has continued. So institutions continued closing their shorts and continued closing their shorts and continued adding their longs. And when longs become more than shorts, that is the moment in which you see a shift from a negative net positioning to a positive net positioning. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So in a situation like this, what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a rejection higher for the market to retrace at least to the 0.32 of the Fibonacci taken on this impulse leg. That definitely wouldn't surprise me. Now, everything that you see me share here on YouTube is just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you head over to my website, which you find linked in description. Here, you have the possibility to gain access to the best mentorship program in the world. You can get all my courses ranging from the very basics of charting all the way to the more advanced topics. You also have the possibility to gain access to the trading station software with the Telegram notification integrations, one-on-one private mentoring directly with me, the COT data software, which is the software that you often see me use in my analysis. And you also have the possibility to gain access to the entertaining live trading show. So essentially a live stream of all my trades as they're happening live every day. So my entries, exits, how I manage the positions, all streamed live every single day essentially in this Telegram channel, which is obviously private just for members. You also have the possibility to gain access to all my EAs. So essentially all my strategies, which you can then customize to your own preference. And here you see breakdowns of each and every one of my strategies, including a 10-year historical backtest of the strategy on high quality tick data. So essentially backtested on live charts. So Basically, I would suggest that you go and check these ones out. And if you continue to scroll down past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So I really suggest to at least go and check it out. The link is in the description, and I will see you in it. If you enjoyed the video, make sure that you drop a like and a comment. It really helps with the creation of new free analysis and education. And I will see you in my next video.